Hello, everyone. Welcome to our webinar today. I'm excited to get started and to walk you through some of these important questions related to year-end financials. And, it's pretty timely given that it is the year end and people are starting to close off their books for the year and get things ready for the next fiscal period. And so today we're going to kind of dive into some of the educational topics associated with all this. Um, I'm going to let a few people continue joining. I can see people are jumping in right now, so that's great. A lot of people attending this one, which is awesome. It's one of those, continuation of our existing series around, trust accounting and short-term rentals in general. And we're going to continue to develop, content that we think is relevant based off the questions that we receive on a regular basis, and also educational by bringing in partners like HostAllies, who is going to be helping us with kind of discussing these topics, given that they work with so many clients that are going through um, similar aspects of their year end right now as well. So host allies will introduce themselves and we'll get to that in a moment. For now, we're just letting people filter in. If you do have a chance, you can go ahead and kind of start. I'm going to launch a poll, so you can go ahead and start participating in that poll. These polls are very beneficial to us. They basically allow us to get feedback around what you're expecting coming into these sessions, but then also how we can improve on them in the future. So we certainly hope that you take the time to fill out this poll. I just launched it, so you have the chance to go ahead and do so. We can kind of get started in a few minutes, but I'm just letting a few more people join because I can still see people jumping in here. So take the time now to just go through this poll and answer the questions. Super helpful for us to continue to develop, good content for our audience so that you can continue to leverage our expertise in trust accounting, and the teams that we bring on and the accountants that we bring on, and their expertise in trust accounting to help you with your end of month process or evolving your processes for the new fiscal year 2026. Vishal, you can go ahead and just jump to that next slide now. Um, I'm going to kick things off and just talk through the session a little bit. From here, we will pass things over to Host Allies. Host Allies will be, the main speaker on these sessions. Really, in these sessions, we like to bring on different accounting firms that we work with. Host Allies has been very, helpful in joining a few of them with us. We bring them on and basically give them the chance to speak to our audience, but also to discuss a specific topic under the trust accounting umbrella. And so excited to have Vishal here. He'll give you some insights into their process, but also what they do and this year-end kind of challenge in general. Really around reporting, we wanted to create a scenario where it's talking through the different reportings that happen throughout the year. So on a monthly basis, quarterly basis, but then most specifically right now in that year-end process. And so if you've been following our webinar series, we've done, I think, 8 or 9 of these now. I don't know the exact number. They're all on our YouTube channel. Um, just go back for a sec there, Vishal. They're all on our YouTube channel. And so essentially we're going through different topics. We started with an overall trust accounting one. We went into bank considerations and how to set up the infrastructure for your banking. We've talked about expenses. We've talked about booking reconciliations, bank reconciliations. So we've gone through a lot of really hot topics in this space, and we're going to continue to develop these out. Now we have a few more in this series specifically. The next one we're going to be doing is around taxes, and I'll talk about that. And then the one following that is going to be just a close up one, and then we're gonna switch our series a little bit and get more into some of the educational topics. But today we have Host Allies here, and really the goal with these webinar sessions has always been to educate. So if you're looking for a product demo, you're not going to necessarily find that here. It's really around theory and conceptual kind of understanding of trust accounting. So to educate you, basically to empower you to do more with less. So essentially, you have a solution now, you're paying for a solution, you are utilizing a solution, and how do you get the most out of that solution so that you can do more with less and then basically have more time to focus on the things that matter and elevate your, property management company, by being able to focus more on the things that are going to help move the needle versus, the financial web of a mess that often comes with short-term rental property management companies that take a lot of time up and it really do become a bit of a bottleneck for a lot of the processes. I've seen people that, had bottlenecks before they've gotten into clearing, and basically clearing helped them break down the bring down the amount of hours they need to spend on the end of month and end of year process so that they could hire more strategically for other parts of the business, or even leverage people that were doing some of this stuff to help in other parts of the business. So you can jump ahead now, Vishal, and really that's the goal with all these webinar sessions, is to really help you understand, conceptually the theory around trust accounting. So we do have two more sessions, like I said. I kind of touched on these already, so I'll keep it quick. We have tax considerations coming up next, hoping to get a tax expert on one of these calls to actually kind of talk through the different considerations for short-term rental property management companies. Also have some cool integration announcements to announce in the future around this as well, so stay tuned for that. April, these are target dates, of course. Really, we're kind of trying to line it up with when people are filing and whatnot. But essentially, April is going to just be a complete overview again, kind of wrapping up the entire series. Hoping to have a client of ours join as well. If you're not following our case studies, you certainly should go to our website and check out some of our recent case studies to see some of the vast amounts of time savings and money savings people are getting with our solution, and to really try to learn from their stories, but also leverage that in your own kind of processes. So if you've missed any of our previous sessions, by all means, our YouTube channel is Get Clearing, at Get Clearing. Go there for the recordings. There's tons of great content in there. And then if there's any questions prior, feel free to use our question and answer section. Essentially, there is going to be a variety of Q&A that we're going to do at the end. But basically, if you have questions throughout the process, feel free to go ahead and start with that. Benjamin or Vishal, if you want to switch to that next slide, we can jump in. So I already kind of launched the poll, so we'll skip this slide. But if you haven't had the chance to go through that poll yet, please do. Helps for us provide some feedback so that we can make our sessions better for you and also target more important concepts that are more important to you. Jump ahead there, Vishal. And so yeah, let's get into introductions. I'll keep mine quick because everyone I've seen the names in the attendees list, and I've met a lot of you already. I'm Corey. I'm VP of Growth here at Clearing. I've been with the company since before we even went to market, so I've been here through the entire development of the product and the go-to-market kind of process. My background's in engineering and computer science. I've worked in the short-term rental space for the past 5 years. Previously at a property management software, now here with Clearing. So excited to have Vishal here, and I'll turn it over to him to basically make that introduction of himself and of HostAllies. And then I'll have a couple more slides just to kick the stage off, and then we will get the show on the road.
Thank you, Corey. Good afternoon, everyone. My name is Vishal. I'm the founder and CEO of HostAllies. Over the last decade or so, I've been closely involved in the short-term rental property management space in various capacities. As an investor managing my own portfolio of properties, also as a property manager managing properties for other owners, and now as a provider of accounting and financial management services to the short-term rental industry. I think all of this experience, I'm excited with all that experience to be able to be part of this panel and some previous panels with Corey. And I'm excited about sharing our ideas on reporting considerations and best practices for short-term rental operators. Back to you, Corey.
Awesome. Thanks, Vishal. If you want to just skip to that next slide, I'll take it from there. Awesome. So, just a very brief introduction of what clearing is. If there's anybody on here who came through and found this webinar through LinkedIn or some sort of social media, and wanted to learn, doesn't know much about clearing, then this is kind of the slide to help you understand a little bit more. So, clearing is an accounting tech stack basically built for short-term rental property management companies. Everything we do is based on the integrations that we have with all the different tools in this industry, and basically centralizing all that data so that your financial brain lives outside of your PMS, where it gives you the flexibility to be able to be portable and to build your own tech stack around your accounting and around your financials related to the business. It also is built from an accounting perspective to be able to help you kind of really focus on accounting when you're working with accounting. And so utilizing clearing, you'll see that there's lots of things that would be manually done through multiple reports that we kind of bring into one place and have the central aspect of the data, all the data that matters being both the bank information, but also your booking information, and then all the other integrations that you have. We bring it all into one place, and kind of make it a process driven month-end process and year-end process, so that you're not you're not always having to learn new tools along the way. You're kind of following a similar process each month, which makes it easier for your team to scale it. So why do we build this system? I mean, there's blurred lines between trust and business funds and short-term rentals. This creates tons of compliance risk and tons of confusion. An all-in-one reliance often is, allows you to go very wide. It doesn't really allow you to go deep on the actual aspects of the accounting. So you'll often find in a PMS accounting system, yeah, it might work for 80% of the scenarios, but then when you do have to make a change or you do have to make difference, or you may have to make some, more particular adjustments to your accounting, it tends to break at that and create a lot of manual work. And so we've seen this with basically every PMS, and that's really why we integrate with basically every single PMS. We really do take it further by being able to go super deep on the concept and not just kind of build a checkbox, something to check a checkbox in terms of like having a very wide solution that doesn't allow for all the flexibility that might be necessary. There's tons of messy data and duplicate data and messy integrations that can waste times and erode confidence. There's lack of clear reporting often. You don't necessarily always see the full picture in a PMS. You might just get an owner statement, for example, and then scaling without structure. So what works at 5 properties can easily break at 50 or 500 properties. And so we want to build a process that can be scaled to the higher numbers of volumes of properties. And we do have clients that are hitting those target numbers as well. Jump ahead there to the next slide, Vishal, and I'll just kind of session outline here today. Vishal's going to kick it. I'm going to kick things over to Vishal. He's going to take over now. But basically, what we're going to be approaching this as is essentially like a sequence of, monthly reporting best practices, quarterly reporting, and then annual closing compliance, which kind of leads into, tax year end. And then also just kind of overall theme of it all is really around, trust versus operational accounting, where certain reports and concepts live, and on a monthly basis, quarterly basis, annual basis, what you should be reporting on and kind of what you should be tracking at least at the end of the day. So, Michelle, I'll kick it over to you. Again, thank you for being here and for helping our audience, get a little bit of access to some education so that they can do their thing.
Great. I wanted to start with a quick introduction to HostAllies and the philosophy behind our genesis. As I mentioned in my introduction, over the last decade, I've been closely involved in the short-term rental property management in various capacities. In these roles, I've gained firsthand knowledge of the challenges we property managers face in managing accounts and finances while we're trying to grow the business, right? There are two primary reasons for this. First of all, property managers have other very important things to focus on, such as taking care of guests, such as taking care of properties, taking care of repairs, such as acquiring new owner clients and growing their inventory. With all that's going on, there are not enough hours in the day to really focus on back office tasks like bookkeeping and managing finances. Now, that's the primary reason. Time is a rarity for all of us. Secondly, back office accounting and financial management can be really complex and time consuming and does require specialized skills and training. So that's the reason we built HostAllies to help property managers manage their front office while manage their back office so they can focus on managing their front office. This way, our clients can grow their business and we provide them with the tools and reporting to ensure that they're doing it in a very profitable manner. We go beyond bookkeeping. We're helping managers set up scalable accounting processes, manage owner statements, manage financial statements, manage their taxes, and streamline everything from onboarding to financial reporting. We tend to serve multiple boutique short-term rental firms with 10 to 150 properties and also select larger franchises. And we've had this experience of working across a majority of the PMS platforms globally. So in today's webinar, we will take some of those learnings and specifically best practices on reporting tools and best practices that short-term rental operators should use and take advantage of to optimize their business. To get started, I wanted to talk a little bit more about what is short-term rental accounting all about. So the short-term rental accounting is really a combination of two different accounting practices, right? They are two interrelated but distinct accounting streams within property management. One is financial accounting, and the other is trust accounting. Now, financial accounting is literally all about it answers the questions about how profitable is my short-term rental company, and if are my costs going up, are my costs going down, are my revenues going up or not from commissions. It covers all the business's money, income, expenses, taxes, and operational reports. Now, trust accounting, on the other hand, is about stewardship. It's about managing money held on behalf of owners, guests, and other stakeholders. It means carefully tracking funds, staying transparent, maintaining compliance, and generating frequent owner statements. Trust accounts are regulated, reconciled, and any mistakes can really impact your credibility. So, for anybody who's new or has recently joined the property management business, it's crucial not to blur these lines. And it's also important for experienced property managers to keep this in top of mind. Both these practices support healthy business growth, reputation, and legal standing. Think of this slide as your accounting map. Keeping these parallel systems strong builds your business on a rock solid foundation. So let's talk about the balancing act on managing short term rental accounting. So the balancing act, managing trust accounting and financial accounting, it feels like it's walking a tightrope, but it's essential to do. These practices are inherently different from each other in various ways. Trust accounting handles the money that isn't yours. It's owner funds, it's guest deposits, it's vendor payouts, it's tax collections. Financial accounting manages the income and expenses belonging to your property management company. As part of trust accounting, you're dealing with things like owner statements, trust fund audits, whereas in financial accounting, you're dealing with things like profit and loss statements and balance sheets and tax filings for your firm. Finally, the tools that you do that are purpose built for trust accounting, like clearing, are inherently different from the tools that are purpose built for financial accounting, like QuickBooks. So there are certain inherent differences between trust accounting and financial accounting. But even though trust accounting and financial accounting are distinct domains, in practice, they are deeply interlinked with each other. For example, the revenue data for you to create your financial accounts actually comes from the trust accounting process. By looking at the distributions or the booking financials and allocating the share of those financials that go to the property manager, that's the genesis, that's the beginning of the financial accounting process. On the other hand, expense data for your owner statements might originate in QuickBooks from your company's financials. That's why managing these processes in an integrated manner is essential, even though the ledgers are separate. When data from trust accounting is routed into the financial workflows seamlessly, you eliminate double entry, you prevent errors, and it makes audits straightforward. The real value comes when both these systems talk to each other. The trust transactions inform the owner statements, which update the financial ledgers, helping you deliver complete, accurate reports to your owners, to the regulators, and also to your own leadership. So now that we've walked through trust accounting and financial accounting and the importance of these, let's get into the topic of this webinar, which is around what is the short-term reporting best practices that across trust accounting and financial accounting. So this slide actually shows you how short-term rental reporting fits together. And just as importantly, when each type of reporting should happen, and what it's meant to tell you. So think of reporting in three cadences. There's a monthly cadence, a quarterly cadence, and an annual cadence. The monthly reporting is about accuracy and control. It answers the question, did we record everything correctly? Do our balances tie out? Are the owner statements clear and accurate? This is where all the reconciliation, the liability tracking, the trust accuracy live on a monthly basis. Quarterly reporting, which is the next cadence, is about insight and adjustment. It answers the question, what has changed? We are tracking a few months and we've got a quarter worth of data. What has changed? What's improving? What's drifting off track? This is where you can spot trends, compare performance, guide an owner and operational decisions. Finally, there's an annual reporting cadence, and that is about confirmation and compliance. It answers the question, are we ready for the taxes? Are we ready for audits? And are we ready for our year-end close? Nothing new should be discovered at the year-end. It should simply confirm what you already know through your monthly reporting and your quarterly reporting processes. Across these three cadences, reporting is split into these two lanes, the trust accounting focus reports and the financial accounting focus reports. The trust accounting focus reports, they actually focus on properties and owners, focus on bookings, payouts, taxes, reserves, liabilities. The financial reporting says focus on the company itself, on the profitability, on the overhead, cash flow, and growth. So when this cadence and focus are aligned, reporting becomes predictable, defensible, and actually very useful instead of becoming reactive and stressful. So that's this kind of is the one-page summary that talks about the cadence and the focus areas of reporting. I'm going to take this to now and go walk you through a little bit more detail on the monthly cadence, the quarterly cadence, as well as the annual cadence. So monthly, the reporting, like I mentioned earlier, is about staying on top of the day-to-day. So let's talk about monthly reporting from a trust accounting perspective. At this cadence, the question is simple. Does every dollar in the trust have a clear purpose and owner? There are 5 core areas of trust reporting that you should be reviewing every month. The first one is about booking reconciliation and expense categorization. This reporting process ties each reservation to rent, fees, payouts, and OTA deposits. The benefit is precision. It ensures that every booking is fully accounted for, and it prevents missing or misallocated revenue or owner statements. The second level of reporting is the owner statement itself. The owner statement detail report. This shows gross rents, deductions, management fees, and net payouts at a property and owner level. The benefit of this reporting is transparency. Owners can understand their statements without follow-up questions or manual explanations. The third monthly reporting or tracking that's really important is liability tracking. Now, this tracking tracks the lodging taxes that are collected and are due to be paid, any security deposits that you're collecting from guests, reserve balances for owners. The benefit of this reporting is protection. It ensures that you're holding the right amounts and not spending the money that isn't yours. The fourth area is the property P&L reporting. This helps you understand if each unit that you're managing is generating the right return for your owner and the property management company. And finally, the fifth is the trust bank reconciliation reporting. This confirms that the trust bank balance actually matches the total trust liability. The benefit of this reporting is compliance. This report guards against commingling of funds and prevents you from getting audit exposure. So together, these five reports create a clean monthly trust close, making owner reporting more reliable, compliant, defensible. So that's kind of the summary of the monthly trust accounting. I'll move to monthly reporting from a financial accounting perspective. Now, this is again, as a reminder, this is about understanding the health of the property management company itself. So there are four areas of financial reporting that you should be reviewing every month. First is expense classification and CapEx review. This report allows us to separate the operating expenses from the capital expenses that a property management company is incurring. The benefit is clean financial. It prevents inflated expenses and ensures that your P&L reflects the true operating performance of the business. The second report is the operating cash flow. This is really important because this shows the cash coming in versus the cash going out for your business separate from the trust activity. The benefit here is liquidity. It helps you avoid a situation where your business might look very profitable on paper, but it's very, very tight on cash. So it's really important to be able to report and track your cash position. The third is the operating bank reconciliation reporting. This confirms that the bank balances match what's recorded in your accounting system. The benefit is accuracy. This allows you to catch duplicate charges, missing invoices, and posting errors before they roll forward. The fourth, and I think the most important one, is the corporate profit and loss report. This shows you how your management fee revenue and your operating expenses, payroll, and your overhead come together to deliver the profit or loss for your business. The benefit here is visibility. You can clearly see whether your business is making money or your margins are really thin, and it allows you to make some very important strategic decisions. Fifth and finally, there is some reporting that you should be doing where you're looking at the PMS and accounting system alignment. This reporting allows you to validate that the fees and reimbursements that are recorded in the accounting system are flowing through from the PMS and trust system. And this provides you the level of consistency you need. So together, these five reports create sort of a reliable monthly snapshot of business health so that the quarterly and the annually reviews can be built on a solid ground and not just assumptions. So I've just walked you through the monthly cadence of reporting from a trust and financial accounting perspective. I'm going to move now to the quarterly reporting, which is really about the reports that you run to make strategic decisions. So I'll jump into the quarterly reporting from a trust accounting perspective. Quarterly trust reporting is where the trust accounting shifts from record keeping to insight. At this cadence, you're no longer just asking the question, is it correct? You're asking, what is the information telling us? There are four core areas of trust reporting that you should be reviewing on a quarterly basis. First is your tax and liability summary. This report shows lodging taxes collected versus owed, along with security deposits and reserves. The benefit is simple. This prevents underpayment, it prevents shortages and year-end surprises. The second important report is portfolio performance. This is a report that allows you to compare and contrast the performance of different properties and owners, and this allows you to break down the revenue and expenses and get clarity. You can identify units that are underperforming. You can identify seasonal swings, margin issues early before the owners even ask you about them. The third trend report that we should be looking at on a quarterly basis is trends related to your fees, OTA deductions, refunds, and chargebacks. This visibility is really important because you can spot rising costs, OTA fee changes, and coverage gaps that slowly erode your owner returns. With all the changes that are happening with the commission models for all the channel fees over the last few months, it's really, really important to keep tracking this and seeing how this keeps changing over time. And finally, the fourth area is the ability to do a check and quality review of your statement accuracy. This is a consistent check across the PMS, trust, and the bank activity. And the benefit here is confidence. It ensures that the owner statements that you are producing are accurate, timely, and defensible. So together, these reports turn a quarterly trust accounting into a proactive process, one that strengthens owners' trust and reduces the risk instead of just reporting historical data. And now I'm going to switch over to what kind of reporting we should be doing from a financial accounting perspective on a quarterly basis. This is where, again, from a financial reporting perspective, where monthly accuracy turns into strategic insight. There are 5 core areas of financial reporting that you should be reviewing on a quarterly basis. So it's first of all, it's just business unit profitability review. You want to be able to compare revenue and costs at a unit, brand, region level. Identify units where the expenses are rising or the margins are declining. Use the data to refine your pricing, your cost structure, your service models. Another way, certain clients of us use a budgeting process where they create a quarterly budget and they review the performance, actual performance against the quarterly budget. This allows them to compare their plans versus real results. The benefit here is control. It highlights areas where there's overspending or there's underperformance on the revenue side, and areas where the forecasts need to be adjusted before the issues compound. The third area is, again, operating expense trend report. This kind of reporting tracks changes in labor costs, cleaning costs, supply costs, software and vendor costs. And the benefit here is prevention. It helps you spot cost creep early and allows you to then be able to renegotiate and rebalance it before it becomes a margin issue, right? The fourth report here is all about revenue quality and growth. The analysis here is focused on average daily rate, occupancy, booking velocity, and fee realization. And the benefit here is direction. It tells you whether the growth that you might be experiencing in terms of units is healthy and sustainable. It also tells you whether the revenue is growing at the same pace at which your units are growing. And finally, the quarterly balance sheet and accrual review. This reporting allows you to validate your cash position, your account receivables, account payables, payroll liabilities, and deferred expenses. And the benefit here is accuracy. This allows you to make good quality quarterly decisions based on real financial position, not just timing distortions. So together, these 5 reports turn quarterly financial accounting into a decision-making tool, helping you adjust your strategy, protect margins, and plan the next phase of growth with confidence. So we just went through the second cadence of reporting, the monthly and now the quarterly, and I want to dive into the annual reporting. The annual reporting is all about compliance, tax prep, and broad insights, right? So let's jump into the reporting that we should be doing or looking at on an annual basis from a trust accounting perspective. Annual trust reporting is about closing the loop, accuracy, compliance, and owner confidence. At the year end, nothing should be surprising. Annual trust report should just simply confirm what you have been tracking in your monthly and your quarterly tracking. But there are 4 critical trust reports that matter the most at the end of the annual close. the final owner P&L and the annual statement. So this owner P&L and annual statement consolidates all of the booking activity, the fees, the deductions, and payouts for the year. The benefit is clarity. Owners receive a clear, complete financial summary that they can hand directly to their CPAs so that they can start helping with their tax filing purposes. Secondly, the second important reporting is the 1099 reconciliation and disbursement report. This makes sure that the 1099 totals are directly equal to the actual trust payouts. The benefit is accuracy, and it definitely reduces the risk of any kind of refilings, owner confusion, and IRS risk. The third area that I want to talk about is your year-end trust liability closeout reporting. This confirms that the final balances for taxes, security deposits, and reserves. The benefit is protection. It ensures that the trust balance equals liabilities and eliminates the commingling risk. And finally, the trust account year-end reconciliation. This acts as the reporting tool to reconcile what's in your trust bank account and compares it to your trust liability position, so that all of the PMS system, the trust system, and the bank data are all aligned at the year end. So together, these reports deliver clean, compliant trust records and make the annual owner reporting smooth instead of stressful. And now let me go into the final, the final aspect of reporting, which is the annual reporting from a financial perspective. So annual financial reporting is about closing the year with confidence and setting up the business for what's coming next. This is where all the operational accounting supports the tax filing and the audits and the strategic planning. There are 5 core financial reports that matter most at the end of the year. The final corporate profit and loss statement. This summarizes all of the management fee income, all of the operating expenses, the payroll, the overheads for the year. And the benefit is if this is tax readiness. If you have this, you can give it to your CPA, and it's reliable data for timely tax filing. That's one of the first benefits. The second very, very important reporting that you need to do is your year-end balance sheet. This validates your cash position, your receivables, payables, liabilities, and debt. And the benefit is accuracy. It ensures that the company's financial position is fully understood and properly reported. The third area, which is really important, is the ability to be able to do a annual reconciliation and cleanup, and take care of the year-end adjustments and to the write-off report. This includes write-offs that you have to do from a depreciation, amortization, accruals, and uncollectible receivables. The benefit here is correctness. It ensures that all the expenses are matched to the right period and the financials reflect reality. The final and the fifth and the final is the annual bank system reconciliation reporting. This reconciles the operating bank accounts to QuickBooks or Xero or whatever financial accounting system you're doing, and validates the alignment with the PMS and the trust system. The benefit is confidence. It prevents any kind of lingering discrepancies from carrying into the next year. And together, these sets of reports help you close the year cleanly, reducing any kind of tax friction and risk, and giving your leadership team a solid foundation for planning the next year. So this is kind of a wrap up of like all the different types of reporting you have to do monthly, quarterly, and annually from a trust and financial accounting perspective. I did want to talk a little bit, because this is a great time to talk about tax reporting. There are a couple of things that as we are ending the year that you must keep in mind, that is going to be super helpful as you close the year. 1099 reporting for owners and vendors. This is the right time to start to prepare and file the 1099s, making sure that the 1099 totals are matching the trust disbursements and any kind of reporting that you're doing from a trust accounting and financial accounting perspective. It's also a good time to make sure that you're tracking your tax reserves in the trust account, making sure you're tracking the lodging taxes you have collected and how much you owe at the end of the year, so you can make those payments. So you're avoiding any kind of shortages or get any kind of penalties. Uh, the third piece that is really important is to make sure it's really important that you align your financial and tax from a timeline and reporting perspective. So if you have some sort of mismatches that can trigger audit flags from a timing, classification, revenue recognition perspective. So it's really important to make sure that you go through that process of aligning your financial and tax reporting. This is some of the best practices or ideas around how to think about tax reporting at the end of the year. Finally, I wanted to talk to you about where all of this lives, right? So the good news is if you are working with a robust trust accounting and financial accounting system, most of this reporting capability is already inbuilt and you can take full advantage of it. For example, I'm using the example here of clearing. Most of the things that I've talked about, whether it's property level revenue and expense reporting, owner statements, tax liability reporting, security deposit reporting, booking reconciliation, allocation reports, property level P&Ls, spend reporting, most of these property and owner related reports already exist within clearing or from a trust accounting perspective. When it comes to the things like your corporate P&L, your operating expenses, the reports that you need to do your corporate tax prep, your cash flow, your balance sheets, these reports already are pre-existing in most of the financial accounting packages that you can use. So even though this reporting is complex, I'm not advising you to go and build this out in Excel. I'm advising you to use the technology that already exists and has this functionality. Just use it in a consistent basis and establish that cadence of doing those reporting and reviews on a monthly, quarterly, and annual basis. Um, let's get to the summary of the main points of that we've covered in this conversation so far. What we've discovered and we've discussed is that trust reporting and financial reporting are unique from each other. But together, they deliver an accurate picture of the short-term rental performance. Some property managers, they do a great job of reporting to their owners, but they don't focus as much on the financial reporting from their own P&L balance sheet perspective. That's not a great idea. It's important to balance and put your effort on doing really good trust reporting and financial reporting, so then you can provide a performance review to your entire stakeholders, your owners, the regulatory bodies, as well as your owners of the property management company itself. The second thing that is important is it's going to be hard to do this if you don't do this in a disciplined manner throughout the year. So establishing this sort of a cadence of doing some of this reporting every month and having those checks and balances then allows you to look at the data, which is already being spot checked every month, on a quarterly basis to start to generate insights, and on an annual basis, not only to generate insights, but also from a compliance and tax filing purposes. So it's separating these two types of reporting and establishing a monthly cadence is the big learnings takeaways from the conversation we've had. And finally, we should be leveraging the trust and financial accounting systems that have these pre-configured reports. You don't have to recreate all of this yourself. They exist, so take advantage of the tools you have at your disposal. Two, I will just go to the final um, um, wrap up slide from my perspective is um, sometimes it's hard to do this on your own, and property managers need help setting up a integrated accounting process, whether it's from a revenue recognition perspective, expense management perspective, financial accounting, trust accounting, or even getting the accurate reporting, right? If you need help, try to go out and seek help from an expert. HostAllies is offering a free consulting session. We would love to understand your unique issues and your unique opportunities, and see if we can advise you and get you started down the right path. But take full definitely follow those three things that we concluded from a reporting perspective, and that'll really help you drive amazing results next year. With that, I'll hand off to Corey to take us to the remaining slides and lead the Q&A session.
Yeah, absolutely. Thanks, Michelle. So yeah, hopefully that gives you a little bit of an overview of kind of like where you should be focused and what you should be thinking about, on a monthly, quarterly basis and annual basis. Really, that separation of trust and the financial accounting and really the different considerations that are involved in each. And so, just a couple tips here, I guess, that I see quite often, just because I'm talking to thousands of property management companies a year. And really, like when you're getting ready to clean up your reporting workflows, some of the things that I can offer as like tips to kind of wrap things up here today is, start with what matters most. Focus on the reconciliation and expense management, owner transparency. Reconciliation is a foundation for basically accuracy across your entire accounting and financial statement reporting. So not reconciling, it's actually kind of crazy how many people I speak to that aren't reconciling bookings still. And that's just like, leading you to basically a free way of getting your balances out of balance, because especially from an owner's perspective, because if you're blindly believing that every booking um is going to have a reconciliation and it's going to match exactly what lands in your bank account, you're setting yourself up for disappointment, because certainly there are discrepancies that happen there. Same within your bank account and bank statement. Often there's duplicates or erroneous transactions that can flow through those as well. Using the right tools for the job, right? Being able to utilize a tool that's purpose-built for trust accounting, being able to use a tool that's purpose-built for operational or financial accounting. These two things work hand in hand, so integrating the two of them together can be very beneficial as well. And getting expert guidance if necessary. There's plenty of experts out there. HostAllies is a great example of an expert that, is involved in understands clearing very, very well. Go talk to them, get that free consultation that's being offered, and potentially see if there's any point of working together. I mean, if you don't want to be doing this, and if there's, 100 other things you could be doing, then it's really important to kind of, maybe take that step towards getting that expert guidance that you might need to give you some of your time back. And then take action now. Year end's around the corner. We see the easiest way to really elevate your processes and make things easier for yourself is to essentially take action at around the beginning of a new year. Keeps all your 1099 data in one place. It makes it a lot easier for you to really scale that system. So, I mean, it is a good time. Build the systems out now that makes your 2026 much easier when you're closing things off. And, use this as an example. If you're going through 2025 and this is where I'm struggling, this is where it takes the most amount of time. Note those things down and then start talking to clearing or start talking to, an expert to kind of get guidance on how to make that easier. I mean, certainly the feedback is beneficial for helping the product get better, but expert guidance would be there to help you kind of get through it as well. So if you need a demo or if you want to consult with me, feel free to book a demo through our website, getclearing.co/demo. Vishal as well, I'm sure is willing to, he's offering a free consultation. So, get a consultation from them, learn more about how you can make your 2026 a little bit easier as well. Vishal, if you want to jump to the next slide.
Sure.
And so here I think it's just questions. So I'll go through some of the questions that we have that I haven't answered yet in the Q&A here. If you do have questions, feel free to um, send them into the Q&A. The first question here I'm reading is um, this is a good one. So how often should I be generating certain financial reports for SDRs? And I think we went through a lot of this through the session, and I think this is a question that was asked really early. But Vishal, how often are you generating, different financial reports for different considerations across the year?
Yeah, I think one the best practice would be if you can get to delivering your profit and loss statement, right, on a monthly basis, and then reviewing a full quarter's worth of financials, and then look at your full year because they provide you different levels of insights, and you can drive that to make decisions. For many of our clients, we've got to a point where the owner statements get done by the 7th of the month. The tax reporting gets done by the 11th or the 12th. And by the 15th of the following month, you've closed the books and you can get very good read of how much money did the property management company make. And that's kind of best practice from a financial reporting perspective. Do it often and do it deep.
Yeah, awesome. Thank you. And there's a question here from Burham that's asking, do we need to prepare 1099 myths for property owners?
You need to prepare 1099s for property owners,
Yeah.
yes.
And if so, are you reporting on the gross total rent or net rental income, net payout to the owners on the form? Like what are you looking at when you're reporting your 1099s?
I think the law has been more refined, and I think the law is different. Sometimes has been applied differently, but generally, what we've observed is you should report the gross rents and then give them a owner statement with their expenses that their CPA can actually code separately. But you want to report the gross rents.
Yeah, and then I think there's actually I thought it was going to be released on Monday, but there's going to be a really cool update from a reporting perspective around this. So stay tuned for that. I think it's probably going to be released within the next couple of days. Should make your life a lot easier there. Um, in terms of if you discover errors in previously issued statements, Michelle, how are you going about fixing these errors?
So I think the good thing about a system like Clearing, where you can actually track your reserves and your balances across the full year, is if you did make a mistake on an owner statement, right? You can then produce an adjusted owner statement later on and true up for some of those mistakes. So it's really important to be able to set the system up correctly so that whatever balances are coming through flow through to the next time period, and then you can make adjustments along the way.
Got it. And just the last question I have here, just to kind of close things off, I guess would be like if you could, give any piece of advice related to the separation of financial and trust accounting, what would be kind of your advice there? Why should you separate these systems for reporting purposes?
I think first of all, I mean, there are three or four reasons, right? One is just compliance risk, right? If you commingle the funds, right, and you get audited, right, and you started using the trust funds to pay property management overhead expenses, then you have a legal issue. The second issue is that there's a real business risk that you can get money as in form of advanced deposits, especially if you're the merchant of record, right? And spend it. Because if you don't have very good insight in terms of where that money is coming from and where it's getting utilized, you may end up in a cash flow situation where when it comes to pay the owners for all the booking revenue, you don't have enough, right? Because you spent most of the money. So there are various reasons, but compliance and being just more prudent with how you manage your finances would be the main reasons for separating the trust versus the operating.
Awesome. All right. Well, it doesn't look like there's very many other questions here, so we can jump to the next slide and we'll just wrap things up here. Really, I just have a couple things to do from a housekeeping perspective. So, yeah, our next webinar is going to be on specifically just taxes. I'm hoping to get a tax expert on that one. It might take me a bit of time to put it all together, but we do have some announcements coming out related to tax filing as well in the new year. So when those come through, we will certainly you'll see them in the product updates, but we also want to align it with a webinar related to what's being released there. So you'll see that soon, early 2026. And then I'll include a link to the session, probably just as a placeholder at the end of this session, so you can, sign up for it and have it in your calendar. But just note that it might, change around a little bit and when it actually is going to occur. There are some new partners involved that I want to get involved into this session as well. So as we go into the next slide, and to close things up, I think it's just a feedback. So yeah, we want to hear your feedback. We're certainly try to take as much of this feedback into consideration as we're developing out sessions and as we change our, once I close off this series, the next series is going to be something a little bit different. And with that, we want to take all the feedback we've gotten through this entire process to be able to generate, better content for you. So at the end of the day, you providing us with feedback gives us a ton of insights into what you want to see, and that helps guide the direction of the software or of the product marketing and webinar materials and educational materials that we put together. So please do take the time just to fill out that survey, and I'll get that feedback and try to work it into the next sessions. But otherwise, that's all from me. Thank you for attending. I'll let Vishal say his goodbye. If you do want to, if you're a prospect and you haven't started using the system yet, or if you're on the fence about it, feel free to reach out. We can have more conversations. Now's a good time to get started. But ultimately, you can get started whenever. So getclearing.co/demo, or you can email me at corey@getclearing.co.
Great. And thank you very much, Corey, for this opportunity. All I would say is, as you went through the webinar, if there was something that triggered a thought and you have a follow-up question, hello@hostallies.com. I would love to take and get into the details with you and provide you a little bit more specifics. Or even if you need a consulting session, a free consulting session, we're happy to do that for you. We do these to really hope that it can actually drive some behavior change for people and make more money, right? So anything we can do to make that happen.
Awesome. All right. Well, thank you all for attending, and we will be in touch about our next session soon. I hope everyone has happy holidays, across the next couple of years here. So, or a next couple of weeks here. So, take the time you need, take some time off, be with family and enjoy your holidays. All right. Thanks again, and chat soon. Bye now.
Thank you.